In this video, guys, let's look at which trade should work right away versus trades that might take a little bit more time to kind of mature. Stick around. Hey traders, warm welcome to you. Thank you for joining me. All right, so this is something to think about from your own trading perspective. Like, okay, you're in a trade starts to go your direction, that's great. You're in a trade, it stagnates, doesn't do anything. Do you cut it? Have you given it room? Is it just slow to go? What's the general rule of thumb? So this is my general rule of thumb. Again, my opinion, guys. This may not work for you, or it might be something you can take and tweak and adjust. That's what it's all about anyway. I like to kind of categorize my trades into ones that I think should work right away based on the thesis and the reason I'm in the trade. And if they don't, I'm not going to give them any room because really the thesis is a little bit flaky then. And so I'll cut them and I'll move on. And there are other trades which, I'll give them a little bit of leeway. If they don't work right away, I'll give them time because I know that they're not quite the same trade. The thesis isn't expecting to work immediately. So let's have a look. So I've split my general trades up into mean reversion and momentum, but that's by the by. The point is that these aren't any new ideas or ways of trading, just generally how people will approach the market anyway, and generally how you'll trade, even if you don't label them as such. So mean reversion is going to be stuff like, your double top type things, anything that's coming back to a mean. So testing highs, I'm fading the highs, looking for it to come back to the mean, or maybe, I think something's too stretched, I think it's going to come back. So it's like an outside in type trade. Momentum type trade, or called momentum ignition actually, is when you're kind of looking for a further move. So it's an inside out type trade. So the market's already retraced a bit and you're expecting it to explode against the upside, or even a breakout. So a classical breakout type trade that will be that, a pullback type trade will be that. Anything where you're looking for a new extreme as opposed to it coming back into price. So fresh price discovery as opposed to coming back into prior price discovery. So those are the two distinct different things. And a general rule of thumb, guys, it's not always the case. Same with trading, those are grey areas in trading, as we all know, but momentum trades should really work right away or pretty quickly, because the whole point is the clues in the name, right? It's momentum. So when we identify momentum, if we're jumping on momentum, we want that momentum to continue. It's not going to be momentum if we kind of jump on the thing and then it just sits and stagnates. Now listen, we've got to give it, not talking about it's got to work in the second you get into the trade, but in reality, if you're in here, then you might give it a bit, but after that, a bull flag turns into just a fizzle out. What was once a bull flag is now a fizzle out, and you're just not going to don't want to be involved in it, because the theory behind the trade was it had momentum, it had strength, it had the right attributes to rock it up, to consolidate and go again. That was the whole theory behind it. And so if it starts to die out and nothing happens for too long, your whole theory is wrong and you're just holding it out of hope. However, if we look at mean reversion, we're expecting the market to retrace back. Sometimes this takes a little bit longer than you think, because it's like a ship turning, and sometimes a ship takes a long time to steer around. You kind of push to a high, you're retesting the high, you're coming back, you've taken that low here, it may well kind of oscillate around and test a bit because it's just time to turn over. Now the best ones obviously will go and they'll go straight away, and that's nice, but sometimes you've got to give them a bit more room. It's like, I'm not trading based on a momentum thesis here. I'm not expecting it to carry. There's no momentum in this. I'm expecting the supply-demand balance to shift and for us to roll and retrace back. And that could easily be that bars are shutting off, in which case it might take some time to rotate back to your level. It might take some time to unwind and become like a normal area or mean position again. So, that's just a general rule of thumb, pretty broad, but however you categorize your trades really matters, to be honest. You can trade how you like, but if you're categorizing those into, hey, these are stuff that really the part of the reason for the trade is continued process and continued persistency of trend and persistence of momentum, then really you've got to see that, otherwise the thesis isn't there. If the other reason for the trade is that, okay, it's the end of the momentum, then just because the end of momentum, it could still just sit there for a bit before it finally kind of tickles over. And very often, actually, finally, guys, very often, you do find this, that maybe it just sits there and tickles. Tickles, what a description for a double top. It sits there and it kind of just, and then eventually it really starts to pick up steam when ultimately, buyers are waiting to see if it goes to highs, no one's really committing, and then you get a bit of momentum, and then there's your cue to kind of ditch it and come out and take the profit. Hey guys, that's me, Reversion, momentum. The way that I tend to categorize whether a trade should work right away. In the current environment as well, I'm filming this, a very, very active environment, very, very volatile. That's working, guiding me quite well into making sure that I'm kind of holding the trades a little bit longer, that I've got the right attributes that mean reversion. I'm being pretty brutal really with stuff that if it's a momentum play and it's not working, cut it and move on, especially when you've got so many opportunities coming your way in the current environment. Anyway guys, take care, keep your risk managed. Whatever trade you're taking, there's no excuse for not having your risk managed, even if you're giving it some time. There's a different concept there, time versus coming out with a loss, but I think you get that. Take care guys, see you next one, bye bye.